For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by David Nelson, CEO of NelsonCorp Wealth Management. Welcome back, David.
Thank you, Brandy. Appreciate it.
So inflation remains a key theme this year in the economy and in markets. Could you share some of the recent numbers that has kept this top of mind for investors?
Certainly is top of mind. That's a good way to lay it out. Inflation's a big item. We haven't seen inflation like we're talking about these days since 1990. So this is a very significant item here. The consumer price index is probably the biggest one that you hear the media talking about as far as the significance that it's having as far as in the average person's pocketbook. What I did is I brought along a chart that I'd like to illustrate as far as to folks, as far as a really important concept. I know it sounds maybe a little vague and what have you, and I don't understand it, but just get the concept. The concept here is we're looking at a couple different bonds. We're looking at government bonds. One is a traditional type bond. The other one is going to be a bond that basically fluctuates a little bit as far as with inflation. And these two, what we're trying to do here is to measure as far as what is the bond market. What are we believing that interest rates and inflation are going to be as far as going forward? And so what this tool is basically showing us is a 3% number. And the 3% number is looking at a 10-year, or a 5-year rather, government bond currently paying 1.23%, and it's looking at the 5-year TIPS, which is the other bond that we're kind of trying to match these up with, and that's showing a negative 1.85. So if we put them together, we're looking at 3% inflation is the best call that we're making today. And when we look at this, again, as I reiterated earlier, we're going back to the late 90s as far as the last time that we've seen inflation similar to what we have today.
That's crazy. So what do these expectations mean for investors going forward?
Yeah, I think rising inflation can rage havoc as far as on certain financial assets. Probably the most obvious one would be the bond market. So when we look at these decisions that we're making, we're trying to gauge it. Is it going to be higher than what the market is expecting? In other words, inflation being greater than 4%, or is it going to be less than 4%? If it ends up at 3%, as is predicted now by the bond market, you're really not a significant move as far as either direction. But if you believe that it's going to be greater, or you believe it's going to be worse, you can really capitalize as far as on this, not just in the bond market, but also as far as with real estate, with commodities in particular, are going to be a big beneficiary as far as this. And again, an opportunity for folks to take advantage of.
All right, David, again, thanks for joining us.
Thank you.
If you missed any of our discussion, we'll make it available for you on ourquadcities.com.